Nobody knows where prices are going. Will the stock market go up? Will Bitcoin go up? Will gold suddenly start crashing? Nobody knows what's going to happen. But there are some data points that are reoccurring. It gives us ideas of probabilities. Because even though nothing is certain, we can say if something is currently cheap or expensive. Things, for example, tend to be expensive when a lot of people speculate on them, right? When there's a lot of short-term holders, when the long-term holders are taking profit, and everybody is just talking about a particular asset. When an asset is trendy, we might consider not buying too much. Now here's one interesting data point for Bitcoin. We've got the long-term Bitcoin price here in black, and we've got the short-term holder supply. So how many Bitcoin are there on average in the short-term holders' hands? And this tends to go up, this orange area, when the price tends to rally further and further. And whenever we stop rallying, we also tend to go down with the short-term holder supply. In other words, when there's a bear market, the short-term speculative money exits and the long-term investors get in. And when there's a bull market, and when the bull market heats up, more and more of the supply is in the hands of the greedy, short-minded people. And so this gives us a good hint, right? We should be buying when there's not so many short-term holders. We should be selling when there's a lot of short-term holders. Now currently we've got 5.4 million Bitcoin in the short-term holders' hands. It is more than what we had when Bitcoin was at 70k. It's not yet at the levels of April of 2021, where we then subsequently went down all the way to 16k in Bitcoin, right? From 60k to 16k. Now this red line that we see over here, what looks like a moving average, that is the short-term holder cost basis. So it appears as if during a bull market, most of the time, the price is above the short-term holder cost basis. Once we break that, once the short-term holders start to get into losses, that's also when this orange chart at the bottom tends to go down, right? So the short-term holders are only interested in short-term profit. They are not going to buy more when they're in losses. They just want to ride the current wave. Now, currently, we are very, very close to the short-term holder realized price. So to the average price that the short-term holders got their Bitcoin for. That price is currently at $92,500 roughly. Once we fall below, then the short-term holder ownership is likely going to decrease as well. And that could be a potential start of a bear market. Now we can have a look at the Bitcoin that is in the hands of the short-term holders. We can also have a look at how much of those short-term holders are currently in losses. And that's the beauty of the blockchain, right? We've got all of that data that we don't have for other markets because we can look at every single transaction and we can then aggregate this nicely into charts like this. Have a look at this. The short-term holders, relatively speaking, that were in losses in the middle of April of 2018, they mark quite a bit of a depression. So even though we entered the bear market during that time, when the short-term holders had been at peak losses, there was an intermediate rally and it was not too small in magnitude, right? From 6.6k all the way to almost 10k. So that's an almost 50% rally. Overall, things were still bearish. The overall market was contracting. The short-term holders were not interested anymore. But when there's too many people that get liquidated too quickly at once, we can get short-term relief rallies. We've seen this multiple times. We've also seen this over here in 2021. The short-term holders had been in massive losses, relatively speaking. The price was at 35k and then rallied again one more time up to almost 70k. Despite the market as a whole already contracting, as in the short-term holders weren't really that interested anymore, but still we did see a quite nice rally in between. And so where are we right now? We are a bit in no man's land because we did see the number of short-term holders going down. We did see the massive loss at some point and we saw our price correction. But now from the 50k, we moved above 100k. And now the short-term interest is interesting enough going up again. It's not coming down as happened in prior fake out rallies. We can also normalize this to 100%. So instead of just looking at this in the number of Bitcoin, we can normalize the losses and profit of the short-term holders to 100%. And of course, ideally, we don't want to buy when the short-term holders are all in profit because then sometimes they might take that profit. But here's the thing. I personally prefer not to just trade based on what the short-term holders are doing, because the long-term holders actually own most of Bitcoin supply. So the real cycles, they get generated by the long-term holders, not by the short-term holders. And so ideally, we want to buy not just when the short-term holders are in losses, we want to buy when even the long-term holders are in losses. But we are quite far away from that. Have a look at this. This is the percent of long-term holder supply that is in losses. And yes, there are times when more than half of the long-term holders are in losses. Interestingly enough, we tend to bottom out in bear markets at similar levels. So when around 40 to 50% of long-term holders are in losses. We are now far away from this again, right? Currently, all the long-term holders are in profit, and the dip that we saw before the bull run to 100K, so from 73K down to 53K, that didn't really bring a lot of long-term holders into the losses. But still, it's good to be aware when the best time to buy actually occurs. It's always when the market in aggregate feels maximum pain, and that's both the short-term but also the long-term holders. You have to be an even longer-term holder than what's displayed over here, or alternatively, you simply just have to ride those waves accordingly. Here's again the same data shown in a slightly different scale. Again, it's interesting how those peaks in losses align quite nicely. It seems like the market is capitulating at similar degrees of pain. And so here's what I mean by that the cycles are generated by the long-term holders. When we look at the difference of the losses of the entire market versus the losses just for the long-term holders, the charts don't really look that different. So here are the long-term holder losses. Here is the market as a whole in loss. So there's really no big difference here. We can simply just follow what the long-term holders are doing if we are okay to not take every single rally too seriously. Now, there are also other approaches to try to time the cycles, right? A very common approach is to simply draw lines on charts, to just use price data, to not use on-chain data, and to then consider where are we within the historical trading range. A very common approach is this here. It's a Bitcoin rainbow chart. It's not 100% completely serious, but still, it attempts to give some kind of a trading range. Now, here is why I don't really necessarily like those kinds of charts. Have a look at how those tops actually don't align that well on this particular trend channel. The first top was way higher than what this trading range suggests. The second one just hit it bang on, but then the third top over here did not hit the top. So this would imply that actually the slope of this line is way higher than is realistic. We should probably have a bit more of a flat trend channel. But there's also other approaches, right? This is a logarithmic regression. And again, I don't really like those approaches too much. I can't shed the impression that this overestimates the growth for Bitcoin. I don't see us going to 400K anytime soon. Have a look at this. This is the linear regression fit here in green. And we've got with a bit of a multiple, a potential support and resistance. This fits the cycles a bit better. But again, if we take this too seriously, we might not be able to take profit, right? The top that we saw at 60 something K, this model would have implied that we could go way higher, that we could hit the 100K already in 2021. But we were far away from that. And so I believe probably there's still an overestimation in this model, and probably we're not going to hit 400, 500K anytime soon. And so we can simply just remove some of this mathematical sophistication from this, right? We can simply just draw curved lines. So that's what I've done with this chart here. There's no fancy mathematical model behind this. It's simply just a line drawn on a chart. But interestingly enough, it does connect the bottoms quite well over time. And the same is true for the tops, right? We're simply just using a curved line, connect those tops, and then we come up with a trading range. Now, what's interesting about this chart is that those two lines are not the same at all, right? They have very different curvatures, and they suggest that the bottoms come in earlier and earlier, and that the rallies aren't really that pronounced anymore. And this would also suggest, unfortunately, that currently we are already very, very high on that trading range. In other words, the potential risk to the potential reward is not that great for Bitcoin. Now, how valid is this model? Your guess is as good as mine. I like on-chain metrics a bit more, and we still see how the number of short-term holders is going up. But what I do take out of charts like this is that it does make sense to have some kind of a parachute, to be somehow hedged. Now, there are many different ways to hedge in the market, right? We can either set a stop stop loss somewhere, maybe at the average cost basis of the short-term holders. We could also buy other assets besides Bitcoin to then potentially have something that we could buy the dip with that's not correlated to Bitcoin, so not another cryptocurrency, but something that simply doesn't go down with the market as a whole. If we do see a down movement, just some kind of a risk mitigation strategy that we don't get caught up during depressions like this, right? When Bitcoin falls by more than 70%, over here even by more than 80%. Again, the volatility tends to decline over time, and even in the very worst scenario, we wouldn't see that much of a decline anymore, right? 57% is shown over here. But still, do you want to lose 57% on your invested Bitcoin? And especially if you hold a lot of altcoins, those are probably going to go down by more than just 57%. Now, besides this model here, and besides this model and this model and this model, there is something else that definitely has to also get into this analysis. And that is the overall macro environment that Bitcoin has always been operating in. Have a look at this chart here. This is the NASDAQ 100. This is a long-term chart of how technology stocks in the US perform. And what we see as this vertical line over here, this is when Bitcoin was created. So at the end of the global financial crisis. So over here, we've got the dot-com bubble. This is when technology stocks went down by more than 80%. Then over here, we've got the global financial crisis, where it went down by more than 50%. And this blip over here, this is COVID. Not really happened here in the grand scheme of things, right? COVID was the worst that Bitcoin has ever seen. But a real correction compared to .com or to the global financial crisis never really happened. Here's the S&P 500, right? Very similar chart. We can zoom out a bit further over here and we can put more context around this. What we see in the 1930s over here is a stock market correction of 86%. This was the Big Depression with the Black Friday. Over here is the .com bubble. Over here is the global financial crisis. Over here is the oil crisis. And yes, stocks long-term tend to go up, right? This is a chart that's 150 years in length. What happened since the creation of Bitcoin is definitely not representative of the stock market. So there can be times where things are way worse than they've been in the last few years. And so when we build all of those kinds of models, they might actually underappreciate how bad Bitcoin could suffer in case the overall macro environment turns worse than most people expect than what we've ever seen before, right? All the Bitcoin models only include data like this. They don't see anything that happened before when we had the real crises. Now, Bitcoin and stocks are not the same, and they don't always move in the same direction. However, unfortunately, the correlation is increasing over time. In other words, the way how both assets move, right, stocks and Bitcoin, the way how they move in tandem increases over time. In the early days, they were pretty much independent. Now they move more up at the same time and down at the same time. Have a look at this data. We've got Bitcoin at the top, and we've got the correlation coefficient to the S&P 500 at the bottom. So the correlation coefficient can be between +1 and -1. When it's at +1, it means that the two assets move in the same direction at the same time. When it's at -1, it means that they move in opposite directions. And of course, this is fluctuating to a degree. So it's a 1-year correlation. We can also see that over time, the correlation coefficient tends to get closer and closer to 1. We don't see -1 anymore. And this makes sense now because Bitcoin is simply seen as a risk-on asset. Traditional finance also invests into Bitcoin. And so when traditional finance wants to risk off, they're going to sell their technology stocks. They're also going to sell their Bitcoin. And of course, vice versa, right? If people want to get risk on, then they're going to buy both stocks, but also Bitcoin as well. And this was not something that we saw in the past. In the past, Bitcoin wasn't important enough to be taken seriously by Wall Street. This is then how that looks like over time. So at the top, we've got the Bitcoin price. At the bottom, we've got the S&P 500. What we see here, that's the COVID crash that also saw Bitcoin coming down quite a bit. And just have a look at how much those two things correlate. They're not perfect. Sometimes Bitcoin corrects and the S&P 500 doesn't. But here, Bitcoin went down. The S&P 500 went down as well. We also bottomed out at similar points. And so the last 5 years years or so, we had very similar performance. But when we just go back a bit further into the past, this is not what we saw in Bitcoin's early existence, right? We saw these rallies and these drops, these rallies and these drops, and Bitcoin suffered quite a bit of a correction of more than 80%, while at the same time the S&P 500 went up. Then the S&P 500 went sideways to down, and Bitcoin started to recover. So this connection, this correlation between those two asset classes really just developed in the last few years. It's stronger and stronger, and that's the reason why this long-term chart of the S&P 500 is so important. I believe when the S&P 500 crashes, or when the Nasdaq 100 crashes, right, when people want to get risk off, when they're going to buy gold, they're probably also going to sell Bitcoin. And because of that connection, and because of the risk, not the certainty, but the risk that things might go down, it is important to have risk mitigation in place as well. Own something that does not move with risk, or have a stop loss in case we fall somewhere at a level where you don't want to take more losses with Bitcoin. I know it's the long-term holders that make money in Bitcoin. It's the short-term holders that lose money in Bitcoin, but you need to consider what kind of risk mitigation you'd want to take. Do you want to own something besides Bitcoin and just ride the waves down? Or do you not want to ride the wave down once it happens and simply cut the losses earlier? Then you need to have a proper system to find that exit point and not look back. Now, I'm personally sharing my entry and exit points into Bitcoin and into various markets regularly on this channel. I also share this in more detail and more updated in the premium membership. So the link is down below, thebitcoinstrader.com. There's also a video on that website, 7 minutes in length, where there's everything explained what you get in premium. If it's your first time over here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers.